And now, unbiased and independent, here is your Manhattan Weekly Market Report with Noah and John from UrbanDigs. Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday. So you're going to get your weekly Manhattan market update, Johnny. Let's get right to it. I'm looking at supply as we get into the Christmas and holiday season. 6,747, Johnny. Looks like it's going down still. Show me that chart.
Yeah, and they were down roughly 4% on the week. And that's, we've been talking about how the story and supply really is there's not that much of a story. It's really sort of a low on the lower side of things in terms of what the recent years are, and it's been trending down as you would normally expect it to. But we gotta tip our hat to supply here, because the low supply is really kind of keeping this market in check here, Noah.
You are 100% right. For a long time, we were saying there's a non-event here, non-event there. This is a demand story. And I think the supply story is starting to play a role and show its prominence in this whole puzzle that is navigating the Manhattan and Brooklyn markets going on here. There is just not a lot of supply. And if you're a buyer out there, you're probably noticing it and feeling it out there. And that's not really an environment conducive for aggressively active falling prices, which we'll get to soon. Johnny, let's shift over to demand. Pending sales, 2,473. Show me that chart.
Yeah, and this is a continuing broken record on the pending sales side. It's just every day we're ratcheting down a little bit more. So we're down to 1.5% on the week. It's really coming close to those 2019 levels. And that's, we're heading there on the downside. And, this is kind of where you would expect a little bit of support. We haven't quite seen it yet. We haven't quite breached those levels yet either, but it's getting close.
Yeah. I mean, we're kind of forming a bottom in pending sales, but deal volume is just sluggish. It's just seasonally sluggish out there. It's no longer really actively falling, but it's just at this lower level. And as a result, the market pulse is just hovering. It's just hovering around the 0.36, 0.37. It's yet to really find a direction. And that's why I like to say that we have arrived at the new lower level. I mean, this is a buy signal. This is a buy signal for me. And people can't misinterpret. I am not saying prices are going to start rising from here. That's not what a buy signal says. A buy signal says that we are no longer actively in aggressive decline. And it looks like we have arrived at wherever we are. And it looks like due to declining inventory and stabilizing demand, this is where we're at. And it maybe peak leverage is in. And that's all we're saying. Johnny, let's shift to the weeklies, see if there's any clue over there. I'm looking at supply, 168 things. Show me that chart.
Yeah, and that's down almost 22% from the week before. And again, this is par for the course on that supply side. And you look at that the front number there, Noah, 168. I mean, that's a low number. I think the last time we saw anything like that, excluding Thanksgiving, you'd have to go back to August, like Labor Day. You were probably lying on the beach last time supply was at a normal weekly level of 168. So we're ending the year on a quiet note in terms of new listings, and it's really how most years end.
Yeah, I don't think sellers have an interest in selling in a market where they can't get their bid. And that's what you're seeing over here, in addition to the slow seasonal weakness. And you got summer in Q4, summer sluggishness in Q4. I like that. Johnny, let's go over to contract sign, measure of demand. That did tick up, 145, though. Show me that chart.
Yeah, it's 145. It's certainly a tick up from the week before. But just in general, Noah, it's still sort of at that new, as you were saying earlier, it's that new lower level. So we're kind of just sort of going sideways here. We're not really making new lows, but we're certainly not making new highs here. And it looks like, how many more weeks of active contract signs do we have left in the year? Maybe next week, maybe the week after that. And then, but not much. So we're most likely going to be ending the year on sort of a weaker note here.
Yeah, we're seasonally sluggish. Liquidity is low. Buyers and sellers alike need to understand that. I mean, buyers, you think about that and you're like, oh, I got all the leverage in the world. And you do have leverage, but a lot of sellers are just not hitting these gap down bids. It's hard to find that desperate, panicky seller that also has that perfect property and is willing to do it right now, and there's no one else involved. It's just tough out there. And this is what happens in our markets time and time again. And John, I want to look at a chart that we just put on Twitter on the UrbanDigs handle that you whipped up. We cherry picked a start date for this. We're really going to be comparing since January 2020, right? So we're really looking at almost a 3-year look at what has this market done. And we're looking at it in 3 ways. We're looking at it in terms of the market pulse, which is that buy-sell leverage indicator. We're looking at it in terms of contract pace and volume. what's going on there, and we're looking at it in terms of price. And, I just want to say, we have participated in the national slowdown in terms of the shift in sentiment from a seller's market right to a buyer's market. And we have participated in the national slowdown in terms of volume as we shifted way down about 60% from peak levels or so. When you look at it on a monthly basis, okay, this is a 30-day pace, but we're down notably on volume, but we're not really down that much on price. This is about a 5% move right over here. And time will tell whether or not that will extend, but this is what the data is showing, John. There's just no collapse.
Yeah, you're right. And it's interesting. You look at the charts on the left, right? This is a real sort of dialectic of the markets, because you start out 2020, hey, what's this COVID thing? Everything kind of goes down, and then COVID passes, everything rockets back up. So what these charts are telling me is we're kind of back to where we were right at the end of 2019, early 2020. What that tells me, Noah, honestly, the story of the markets for the last couple of years is over. 2023 is going to write its own book.
Yeah, and it's going to be an interesting book. And, I just want to say this point right here, this end point on this price action chart right there, that is up to August. It's a little early to look at September and October and November and obviously December, because those deals haven't closed yet. And when you think about what are those deals going to show, September, October, November was not the aggressive decline months. All right. The aggressive decline months were really May into June into July into August. Those were the aggressive shift months. So I would not be surprised, Johnny, if time goes on and you start to see this price action number bottom or even rebound a little bit off the bottom right there. Sometimes that happens when you have big shifts in short period of times. Now, I'm not saying 5% is a big shift, but when you're looking at resale condo price per square foot, that doesn't move that much. Yeah. And 5% in a short period of time, and a quarter or two, is a big move right there. So very interesting to see what's going on here, Johnny. And thank you for pulling up all of this data. That is John Walkup. I am Noah Rosenblatt. We're both from UrbanDigs. Don't forget, you guys got questions, we got answers. Visit our forum right over there. If you want any of the reports that John whipped up today, it'll be right over here in just a few moments. Other than that, this has been your weekly Manhattan Market Update, and we'll catch you next time.